Good afternoon, everybody, and welcome to this week's weekly market analysis class. Today is Monday, the 24th of April. Before we get started, as always, please understand that any advice in this session is of a general nature only and that your personal circumstances have not been taken into consideration. All right, so let us have a look at what we have in the news that's coming up this week. Now, before I go further, I just want to make a quick little announcement. The classes from here forward, I'm no longer doing the Thursday class, so what I'm doing is I'm doing a strategy class back to back straight after this. So probably the market analysis may take me somewhere between 30 and 45 minutes, and straight after I will have about a half an hour to 45-minute strategy class as well. So I will break it up. So those of you who want to stick around for the whole class, by all means do so. Those that need to leave after the analysis, you can also do that as well. You have a good opportunity to ask any questions, but just letting you know. Okay, all right, so let's kick off. So this is what we have coming up this week of major importance. Now, before I do that, just to recap, over the weekend, the biggest news that happened, just in case anybody didn't notice it, is the French elections. Okay, and the result was, although going with the theme of Brexit decisions, Mr. Trump becoming the president, is not of super surprises, although it was not what was expected. So basically the bottom line is that for the first time ever in France history post World War II, okay, we're going to go into the second round of elections with a non-mainstream candidate. Okay, so if you didn't know, it was Moreno for the independents and Le Pen, who's a far-right candidate who basically taken out the majority of the votes and will proceed to the next phase. Consequently, it brings a lot of possibilities of change for France. The euro is reacting to it. The reality is that probably Le Pen will be a softer landing in the negotiations of the euro compared to Macron. So we need to see what's going to develop. We saw today the euro gap hugely, and it's basically from these elections. So you would have noticed as well that from a brokering point of view, actually every broker that I know of increased margins over the weekend to make sure that people didn't get into positions that were too large for the possible gap in nature, also to protect both broker and clients. Okay, so that's what's happened on that front this particular week moving forward. In terms of data, I think that one of the most significant bits of data that will be coming out is from Japan. Okay, Japan's is due to give a monetary policy statement. We already heard Mr. Kuruda basically say that the current pace of bond purchases will continue for some time. Now, unless there's any big surprises, this is something that could influence that. But whenever Japan makes a monetary policy statement, it's always a little bit volatile, so keep alert to that. That's going to be happening on Thursday. We also have from the euro, they will be making their rate decision and also include a press conference on Thursday as well. So that could be a little bit volatile, specifically with what's happened right now with the French elections. So it's all a little bit up in the air. In terms of other major news that will be occurring this week from the Aussie, from the Australian point of view, we have our CPI numbers, which are due on Wednesday. Okay, that's about it. From that point, in the US, we have basically this week is a non-US dominated week. The most significant data happens towards the end of the week, which is the durable goods orders and the advanced GDP number. We do have the consumer confidence, which is somewhat lesser, and it's also towards the end of the week. But those are the major bits of data that are due out this week. I feel anything euro related this week is going to be a little bit volatile. Like a euro-yen combination is going to be the most volatile, but that's a pair that we don't really look at. So I guess from the majors that we look at, possibly the Aussie yen will be the currency that's going to be affected the most based purely on data releases. Okay, so there you have it. Please take note that these times that I show you on my charts are in my local time, which is Australian Eastern Standard Time, otherwise known as Sydney time. Okay, so just please make an adjustment if you need to so that you are aware of that. All right, with that in mind, if you do have any questions, please feel free to type them in as we go along. I will address them as I see them. And of course, for the latecomers that have just come in, the second half of the session will be a strategy class, as I've already said. We'll no longer continue to do the Thursday class. I will do it all on Monday so that it'll run probably a little bit longer, and those that want to stay for the whole duration, by all means do so, and those that need to carry on with whatever they're doing, you can log out. Okay. Since we are still in a trading challenge at the moment, let me give you an update so that we can all see what's happening there. I forgot totally about that. Nothing's triggered in the last week, I don't think. But the latest from the challenge is, what do we have? Now remember, I'm tracking two separate trading, the entry is the same for both. I'm trading the same method, but I'm trading two different exit strategies. Method one is basically a straight 2-to-1 risk reward. So either I will get stopped out, losing 1, and in my case I'm risking 250 for every trade, or I will hit my full target and make my 500. There was one exception to this, which I think it was just a bit of a gut instinct on it, but I called it out nice and early. I said to everybody, let's move our stop to break even, and consequently we got stopped out on that trade, and the trade went right against us. So I saved us 250 because we would have had a loss over here. I think I can't explain that. That's just years of experience trading. I just felt that I needed to get out of that trade. Okay, so we didn't lose anything, we didn't make on anything, and that's that particular trade there with the asterisks. Okay, so that's method one. So we're up 1250, method one. So 1250 on a $5,000 account represents, what does that represent? Give me a sec, get my calculator out, divided by 5,000. It's roughly 25% return over 8 trades. Okay, now I am taking a little bit of larger risk. I'm risking about 5% per trade. Now via method two, you can see here, method two, what I'm basically doing is I'm closing out half of the trade when I reach T1, moving my stop to break even to lock in profit, and then I wait for T2. Okay, now it just so happens that the net result right now is exactly the same, but with method two, I've only been stopped out 2 times, whereas with method one, I've been stopped out 3 times. Okay, so, and this trade here, which had I not made that movement, would have been a stop out over here. With this method, locked in a little bit of profit, made nothing on the second half. Okay, so there you have it. That's the full update. We've taken 8 trades. It's taken us, we started 17th of March, today's the 24th, so we had a bit of holidays in between there, but just over a month, we've been able to trigger 8 trades, and I'm still looking for the next 12, so let's see what happens with that. Okay, let me bring my charts forward, and we shall start off with the Aussie dollar. Okay, let's have a quick look. What can I see? Aussie dollar, Aussie dollar. Okay, the most obvious trade, what I instantly want to do here is I want to just see, I want to draw a floor here. I want to just keep it here. Let's just see. I'm not really looking for longs, to be honest. I'm feeling that I'm looking for shorts, but we just gapped a little bit today with a little bit, oops, wrong color, you can't see that very well. So we closed there, we opened there, so there's a slight little gap in there. As long as we stay underneath that level, I'll be looking for if I can get an inside candle situation there, and I'll be looking to try and trade it down. On the plus side, if I do get the setup that I'm looking for and I break through the blue line, this should accelerate, okay? Because I get the feeling there'll be a lot of orders sitting in this vicinity, which will basically give me the acceleration through that I am looking for. So, but I need to get a setup, and hopefully if I do get the setup, the distance from the entry level to this line will at least be T1 equal. Okay, if it's not, then I could have a little problem there, and I'll have to address it as I come up and as I see it. Okay, so let's look, the best thing that we can do right now, Aussie dollar, is we need to wait. Let's see if I get a setup out of that and to allow me to go in, or what could happen is we could trickle through. If problem is if we break that there, then we need to reassess the situation again, because we then would technically be not considered in trend anymore. So let's wait and see what happens. Okay. So if anybody is looking to fire out some trades in this region, what you could do is step down a time frame, and we could box up this region. I can see that this region here could be a region where we start to oscillate, but drop down to say a 4-hour chart to see if you can trigger any trades in there as such. Okay, at the moment I'm not interested in that trade, but if there's anybody that is interested in a 4-hour range trade, that's on the cards for you as well. All right, so let me just get rid of that because I'm not wanting to look at that. Aussie dollar today, right now, nothing. Let's move on. Euro USD. Okay, very, very clear here. We can see the huge gap that we've produced. Market closed up here on Friday, opened up over here. This distance here. Let me talk a little bit about gapping. Every time I see it, it's a really good opportunity for people to understand what happens. Gapping can happen when the market is closed. It can also happen when we have a sudden rush of news release. Okay, let me explain it to you in the best, easiest way that I possibly can. Okay. All right, so the market finished at this level here. Okay, let's say that I wanted to buy, I was interested in buying at this level where I've just drawn my line. Okay, and let's call this level, what is it? Let's just call it 107. Just simplify things. Let's call it 107. Okay, so I'm interested in buying at 107. Okay, and I'm going there. I got my money ready to go. I want to buy at 107, but then all of a sudden something happened, and all the people that were interested in selling to you at 107, they remove all the orders of the market and they say, no, 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 no. I'm selling, but I'm going to sell up here at 109. Okay. Let me explain it to you in terms that you may be interested in. Okay. Has anybody ever gone to a home auction in Australia, in Sydney particularly, or Melbourne? All right, let me describe this to you. You go to this auction, you want to buy this house, you've fallen in love with this house, you have a budget that you're willing to pay for this house. Let's call that budget $800,000, and you will bid frantically, and all of a sudden we get to that magical number. You put in your $800,000 bid. This is the price that you're happy to buy at, but guess what? The seller only wants to sell for $1 million. There are other buyers that are interested, but they cannot get it at that price either, so the price keeps pushing, pushing, pushing until we meet the market. Okay, the market, finally the seller says, yes, I will offload at 1 million. So even though you were happy to pay 100,000, can you buy your house for 800,000? Yes or no? Talk to me, guys. Can I buy at 800,000? No. Okay. What we forget when we trade, trading is the same thing. You want to buy it at 107, okay? And you're happy to change and pay at 107. But if no one wants to sell it to you at 107, you're not going to get filled at 107. Sometimes, because this is not just one house, okay? This is a currency. Sometimes what may happen is there may be, let's say, 100,000 people or 100,000 units that want to buy at this level, but there may only be 1,000 sellers that are happy to fill you somewhere in between here, okay? Will all of the 100,000 people that want to buy at 107, will they get filled at 107, or are some people going to miss out? They're not going to get filled, okay? Some people will get missed out. So, do we understand the concept of what I'm trying to explain here? All right, now, and I know you guys are the good ones because you guys are the ones that come to the classes and learn these concepts, you know. But what can happen is if, let's say the market closed over here, but I had an order that I forgot to withdraw out of the market that was sitting here at 107.50, okay? And this order was a buy order, all right? It's a buy order. Now, I want to buy it at 107.50. Now, a pending, a stop buy order or a stop sell order, it's an order type that when the market goes through that level, it becomes a market order. By default, it becomes a market order and will get filled wherever the market goes. Now, we do have a volatility protection system. Ask us about it, and it's been deliberately built in to stop what I'm about to describe happening. If you have a stop buy in the market at 107.50, if you had it in there on Friday night, okay, this morning would our order have been filled at 107.50? Yes or no? Can I just get a, so basically what I'm saying, the market is down here. You had an order to fill up here. Would I have been filled at this order? The answer is no. Okay, someone's actually typed in an answer, I would have been filled in with a profit. Actually, no, you wouldn't have. This order, as the market opened up here, you would have been filled right at the top of that candle. Okay, and if you're still in the trade, you're actually at a loss. Can you see that you're actually at a loss? Now, the reason it gets filled at the top here is because this order became a market order, and when the market opened, the market was all the way up here, so your order got filled right up here. So you're a buyer right up there. Now that feels very ripped off, okay? And I agree with you. It doesn't feel nice at all. But it's not the broker's fault, and I'm not defending brokers, okay? I'm just telling you how the market works. When you go to buy the house at the auction, you know, it's just bad luck. You know, there's no buyers there. So if you want to get the house, so if you rang and you said to someone, look, just buy me the house. Basically, this is this type of order. Just buy it. Okay, we'll buy it. Well, this is where the market is. Okay, so please understand that a stop buy or a stop sell will fill you wherever the market is. Now, on a plus side, if you had a sell limit here, let's say I wanted to sell at this level, okay, this morning you would have been filled up there as well, but as a sell. Okay, now if the market continued to go up, well then that's bad luck. But if the market pulled back like it is, that would have been, you would have been filled in at a price significantly better than what you wanted. Okay, so it works both ways. All right, now if you had an order over here to buy or sell, doesn't matter which one, but we have a system which is it's a volatility protection system, which can allow you to specify a maximum distance from this price that you will accept to take the trade in. In other words, you can say, I will take the order, but with a maximum of 5 pips slippage or 3 pips slippage or 15 pips, you specify, and let's say that your limits might be in there and in here, okay? If it goes beyond that, you just simply will not get filled, okay? Does everybody understand what I've just described? And if you don't know it, ask your account manager, email us at the education inbox, and I'll make sure that we send you out the information, all right? So, okay, someone's asking me, how would my stop go? Okay, what can happen is, let's say that I wanted to sell there and I had a stop over here. What happens is the market opens up here. So what happens, this is the worst case scenario. You get filled up here and you get stopped out up here. All right, well actually that won't be too bad because the movement's not going to be too much, but you basically get stopped and filled at the same time at a loss. Okay, but you can prevent it by, now I'll also say this is rare. We haven't had a big gap like this for ages. Okay, so it doesn't happen all the time, but if it's going to happen, it's more than likely that it could happen over a weekend. Okay, all right, enough about that. I hope everybody understands that. Go back, review it. It's a very, very important lesson. Sometimes we think that just because we see a price on the chart, like even right now, I'm looking at this price here of 107, 108.70, okay? Now, if I try to buy a 1 mini lot, I'm probably going to get filled at that, but if I put in a massive order in the market and my order is, there's not enough sellers at my price, guess what? I'm not going to get this price. I'm going to get a price where all the liquidity is. So, and that's normal. When you trade smaller and the liquidity becomes thin, we feel it, okay? But if you are a larger trader, you will see it more often, okay? All right, so Euro USD, the best thing that I can see in this chart is I'm tracking this channel. So considering we're up here, I'm going to look for something up here to see if I can get an opportunity to sell into it. Okay, now right now there's going to be a lot of pressure from all the gap traders, especially right now. I think London and Europe is starting to wake up, so they're coming online. So there's going to be a bit of pressure in there, but I'm not a gap trader. I don't really believe in it. It can hurt you significantly before the gap actually closes. The only other thing that I can see here is, let me just zoom out. The other possibility is I could maybe just draw a little bit of a line there, but it's not the best. No, I don't like it. Don't worry about it. I'm going to try and get the channel. Let me get rid of this too. I don't like that now anymore. It's not relevant. Okay, so there you have it. So what our plan is with the Euro USD is, let's see if we can come up here to find an entry to shoot us back down. Okay, all right, let's continue along. GBP USD, let me zoom out. Okay, so of course last week we had this big candle. It was produced by, does anybody remember what made that big candle? Let's see how good you guys are while I analyze the chart. What made that big candle? I can get rid of this now, I don't need it. Thank you, Craig. Prime Minister May made the candles. They announced an election happening. What's the date? It's happening in June. Because I remember seeing the headline said in April, May calls election for June, and it was funny because it was April, May, June. Everybody's telling me June 8. That's it. Yes, June 8. Okay. So what it has set up, it's set up a classic flag pattern for us. What does it look like on a 4-hour chart? Let me see it. Oh, this is really nice. On a 4-hour chart, this is a classic flag pattern. There's your big flag. Sorry, the pole. There's the flag. The way that you trade this is you trade it in that direction. You do not trade it in this direction. That's not how you trade a flag pattern. So what you're looking for is, let me draw some lines on it. Let me just go to a daily. I just want to see what that looks like. Yeah, I'll go off the 4 hour. Okay, so what I'm looking for here, let me show you what I'm looking for. I'm looking for a candle to come up and close above this kind of level here. If I get a candle that gives me this, like that, bang, I'm on that. And I'll be aiming for about this distance. That's typically how you would expect this to work out. Okay, so there you have it. So we've created flag patterns usually come up after a major news announcement like that as well. All right, just for the record. So there you have it. So I'll leave my chart on a 4 hour chart. What I might do is I'm going to just put an alarm on my chart here. The easiest way to do it is just get your crosshairs up on your chart, put it where you want to put it. Okay, then I simply right click, and then if I go to, where is it? Okay, here it is. If I go to the trading, so I've right clicked in the right spot and I go to trading, and then I just go to alert, click, and I should get a box pop up somewhere. Where is this box? Give me 1 second. I've got to find this one. It's on one of my other screens. Sure it is. Oh, I've already done it. Oh no, it's already up there. Look, that's how easy it is. Oh, I forgot how easy that was. Give me a second. See this little red mark there? This is the alarm. It's telling me where I've set it, and what it will do, your computer will make some sounds if that level is reached. And if I go into alerts down here, I should also see it over here. Okay, and graphically, there it is. Did everybody see how I did that? Okay. Cool. All right, so I've got an alarm there. If that alarm triggers, I want to watch this chart because I could get an opportunity to take a trade. All right, let's move on. Let's have a look at gold. Gold, let me zoom out. Okay, let's get rid of this line now. It's no good to us. Gold looks definitely like it's in trend now. This section of chart looks like it's in trend. Okay, so if we were to apply a trend-based trade, let me zoom in. What I'm looking for is I'm looking for some kind of price action and then shoot up into this direction. It looks like a pretty standard type trade if I get it. So let's look for it. Let's see what we can get out of this one. Okay, so that's gold. Let's move along. US yen. Okay, US yen is exactly the same as gold, but just the opposite. Let me see if there's anything else that I can find on this. Okay, let's keep this. I don't need these ones. Let me get rid of these. This one's already happened. We've already broken out of that range. Okay, so with the US yen, we can look for, if we're going to try and trend trade it, if we get anything here, we can look for it that way. Or let's keep track of this. Let's see if anything happens up there and we look for it again in over here. Okay, it's all we can do. The pattern's good. There's nothing. Oh, there is one other option we could Let me just draw one more line on this. I just want to see what this looks like. Let's also look for something here, because it's basically support level, and then resistance. Okay, so let's see if that becomes resistance as well. All right, so you can see how when I'm looking at my charts, essentially I'm trying to find different opportunities all over the place. Okay, so I'm not just narrow-minded and got my heart set on one trade. I'm just looking for the highest probability. So I've put all the marks that I need. Let's see what shows up. Okay, so there's my US yen. Euro yen. Did anybody see this sequence of red candles? It was like 14 or something. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Oh, it was 10 here. I took one in one of my personal accounts. I got stopped out on it, and I took a second, and I just got lucky because I didn't see it when it happened. I saw it late, so basically I took something out of it. But did anybody else see it? I'm just curious. Normally someone usually emails me about it, but I didn't receive any emails about it. Okay, yes. Okay, Paul saw it, so did Rav. Well done. So if you traded it, okay, well done. But if you traded it on day 8, you probably would have got stopped out like I did. But then I got it again, so I was able to hold on, and I got a good movement out of it. Right now, Euro Yen, this big candle's just wrecked everything. Okay, Euro Yen, I got nothing, guys. There's just, okay, I'm going to draw one thing that I might use a little bit later. Let's just keep it, let's draw this line, and let's keep it on our charts. Okay, let's see what happens. But for right now, essentially the way that I'm looking at the Euro Yen, it's expanding in its trading. We've broken lows, we've gone high, like we were trading narrow, and now all of a sudden we're trading big. So I want it to narrow in again, but I'll keep this line because I like it. I will be interested in maybe something off that level. Okay. All right, so Kiwi Dollar. Kiwi Dollar. Okay, Kiwi Dollar is producing a little triangle right now. I can see it. It's very, very clear to me. Let me share with you. Let's get rid. I'll keep this here just in case, but I'm not using it for right now. What I am using is, like, I'm willing to. If I go into a 4-hour chart, it should be more obvious. Yeah, you can see it there, but I'll go back to my daily. Okay, let me zoom in one more. Let me go back. All right, I'm not. Oh, hang on. See, that's an engulfing candle right there to go into this direction. But this is my first touch. This is my second touch. This is my first touch. This is my second touch. I technically don't know yet if this is the high or if it's not. To be honest, I get the feeling that this is going to be like one of these triangles. Okay, so until we get a kick off it and I can confirm my second touch, I don't know if this line is going to be like that, if it's going to be a rising wedge, a parallel, or if it's in fact going to be a convergent triangle. So I don't know where I'm going to place this line yet. So for now, I'll leave it here tentatively. Definitely down the bottom, 1 and 2, they're locked in. They're locked in. Number 1 is locked in. Number 2, I don't know where number 2 is yet. That's why I am not committing to a trade. Does everybody understand that? Okay, if you're aggressive, perhaps you may be in this trade already off this engulfing red candle. Okay, Okay, Paul's asking me, but there's a fractal over here. That's correct. There is a fractal, but look at this. See this fractal over here? The market can still continue to go up, okay? So the fractal only looks at essentially really at a 3 candle. It's a 5 candle sequence, but think of it as a 3 candle sequence. So what I'm trying to say is it's not necessarily the significant high, okay? We get fractals in between runs as well. You know, see, as we're going through this run over here, we're getting a fractal down here, but then it continues to go to a lower point. Okay, so same as over here. I don't know if that's a high yet. I can only confirm once it comes back to this line. Okay, once it comes back to this line, then I've locked it in and I can actually trade off this one. Does that help with that? Or does that clarify, Paul? Okay, thank you. All right, so I can't lock in my top line yet. So, but I will say if you are a bit of an aggressive trader, you may be in this trade already. Okay, but I just point out for both parties, so the aggressive and the more conservative. All right, let's move on. US CAD. Okay, this is pretty clear. I'm tracking this. Oh, hang on. Let me get rid of this one and let me get rid of this one too because I don't want it right now, but I'll add in. I could get a double top here. I've just seen it now. If you get any kind of price action here, you may have an opportunity to sell in. But I don't know yet. I've got to wait for the current candle to finish. Okay, so look at this one tomorrow. You could get something here, US CAD. Last on my list is my oil WTI. Oh, it's a shame that we didn't quite get up there to get that trade in. Give me a second. Okay, I like this line. We've used it before, so we got 1, we got 2, we got 3. Let's see what happens over here. So what I'm going to look for is I'm going to look for something that gives me the opportunity to buy. There you have it. That's my oil. Okay, guys, that wraps up today's market analysis. What I'm going to do is I'm going to take a 2-minute break. I'm just going to quickly get a glass of water. I'll keep the classroom open and I'm going to cover a strategy. Okay, so I'll press stop